execute the trading strategies effectively, you need to understand the smart money trading concepts first. Because these concepts are the foundation of this trading system, and success depends on applying them correctly on the chart. Let's start with supply and demand. Supply or demand is a zone where price rapidly pushes away, creating inefficiency and a break of structure or change of character. There are three factors to consider when identifying supply and demand areas for trading. Did it create inefficiency? Did it break the structure or change the character? Did it create liquidity before the zone? So what is the inefficiency? Inefficiency occurs when we have gaps between the candles, and when it happens, price is more likely to come back to this area to fill the gap. What are break of structure and change of character? A break of structure is formed in a trend continuation. Every time price breaks a structure level in the same trend direction, it signals a trend continuation. On the contrary, when price breaks a structure level in the opposite direction, we call that a change of character, which signals a possible trend change. Change of character supply and demand zones are most effective when they break through two or more supply and demand zones. Change of character forms after a higher time frame mitigation. Price impulsively breaks through the zones with a few large candles. What is liquidity? If smart money wants to buy a large number of currency pairs, they will need sellers in the market. The existing conditions to place these positions are called liquidity. So imagine that we are in an uptrend, and if banks want to buy this currency, logically, they need many sellers. But since we are in an uptrend, everyone is looking to buy. So let's suppose that price makes support before reaching the demand zone. So this support will be an interesting area to place buy orders for support and resistance traders. And guess what type of orders are their stop losses? Sell orders. Now, smart money can grab the sells and place their buying positions. Here are some important points about liquidity. Liquidity zones are further confirmations to execute a perfect trade when formed above or below a trading zone. There are many types of liquidity, but we mainly pay attention to equal highs and lows. Stop losses define liquidity. Where the stops exist, the liquidity also exists. So, next topic we have order blocks. Order blocks are optimized supply and demand zones. We consider the last recent candle that created the inefficiency as an order block zone regardless of being bearish or bullish. But we have three rules for a valid order block. First, it must have inefficiency. Second, it should lead to a break of structure or a change of character. Third, it must be unmitigated. Unmitigated means that it has not been tested by the price yet. Since order blocks are one-time use, we don't consider trading mitigated order blocks. Here is an important point. In two conditions, we use wicks as order blocks. First, when the shadow of the order block candle is bigger than the rest of the candle. Second, when the shadow of the following candle grabs the orders. The next topic is the market structure. Supply or demand, who is in control? Imagine this is a 1-hour structure, and the price reaches a demand zone. So, it would be wise to look for buying opportunities. But what if the price came from an unmitigated 4-hour supply zone? So, you want to trade the controlling side of the market. Let's suppose you're waiting for a demanding trade to go long, but the price comes from an unmitigated supply zone. In that case, supply is in control, and you can't trade demand without confirmation. Always check where the price came from. In two scenarios, you can use a risk entry. First, the price broke through the supply level, giving us a bullish higher timeframe bias. Second, the price broke the structure but have not reached the unmitigated supply zone yet. Now let's have an example to explain how to establish which side is in control. Look at this example. Imagine this is 4 hour structure, and we can clearly see that we are in a downtrend, so supply is in control. Although we have a short-term uptrend, as long as we stay below the 4 hour supply zone, we have a bearish bias. But if we break the major 4 hour supply zone, we can establish the demand took control. And as long as we stay above the major demand zones, we have a bullish bias. But if we break the demand zone to the downside, we can establish uptrend is over and supply takes control. Now that you understand the concepts of a smart money trading system, it is time to explain 3 of the best entry strategies. But before doing it, if you have enjoyed this video so far, please give it a thumbs up since it goes a long way to support our team in making more videos. Also, comment below with your thoughts and questions, and we will do our best to answer them all. So next, we have the trading plan. For the following strategies, we recommend choosing only one pair to trade in only one session. London and New York are the best choices. You should master the chosen pair by backtesting the heck out of it. Start by going back a few months on the chart, and backtest every single chosen session. Personally, we only trade euro-dollar in opening the New York session for about 3 hours per day. The reason is we started to trade forex for financial and time freedom. So, why would we spend 8 to 10 hours a day on the chart then? Remember, every session has more than enough opportunities every single day. Now, let's jump into the trading plan. The smart money trading plan consists of 2 steps. First, we analyze the market structure in higher time frames to find market direction, who is in control, optimal supply and demand zones or order blocks. Second, we observe lower time frames to execute trades based on 3 types of entry patterns, including supply or demand flip, change of character, continuation. Analyzing the market structure in higher time frames. As I mentioned before, we only look for 2 factors. Market direction, who is in control, optimal supply and demand zones or order blocks. Look at this example of euro-dollar 4 hours time frame. Starting from the left, we could see that we have a break of structure with inefficiency, so we have an order block. Then price pushes to the upside with inefficiency, but since it could not break the structure, we will call this a demand zone. After that price broke the demand zone to the downside, we can now say that supply took control. Once again, we had inefficiency with a break of structure, so we marked the new order block. And this zone would make a perfect selling opportunity, and our target would have been the next unmitigated order block. We can see much more detail if we look at the same chart in a 1 hour time frame. This is where supply took control in the higher time frame. So now we have both a higher time frame and lower time frame bearish bias. So here we have a perfect order block formation that could have been a selling opportunity, and our target would have been the unmitigated 4 hour order block. So this was just an example to explain how we analyze the chart in the higher time frame. Now it's time to explain our entry setups. In the second step, we observe lower time frames to execute trades based on 3 entry patterns. The first one is called the supply and demand flip. In this pattern, price creates a new high, and it tests the last demand zone and pushes away from it, but fails create a new higher high. Instead of creating a higher high, it broke through the last demand zone with an impulsive move, leaving a supply zone behind. Price retested the supply level, where we put our limit order and opened our position. Let's see a live chart example. Here price broke through the structure level with inefficiency, leaving behind an extreme supply level. After mitigating this supply zone, price failed to make a new higher high. It breaks through the supply level with inefficiency, making this candle a perfect order block and an opportunity to go short. So this is how we execute our trade. We place our order as spread size below the order block zone with our stop loss a couple of pips above, and we will target the next demand zone in the higher time frame. But remember, this pattern is most effective when the price aggressively pushes away from demand and supply zones and rapidly breaks through the last demand zone, leaving inefficiency behind. So let's move on to the next setup. We call this change of character pattern. This pattern forms after mitigating a higher time frame supply or demand, meaning that we always trade this pattern if we have the market in our direction in higher time frames. Here, our higher time frame direction is bearish. After mitigating the supply zone, our short-term trend changes the character with inefficiency, leaving a perfect supply zone. So when the price gets back to this level, we will execute our short entries. Let's see a live chart example. So here we have the Euro-Dollar 15 minutes chart. We have an overall bullish bias and a perfect 4 hours unmitigated order block. As the price approaches this zone, we have no idea if it will push the price to the upside or not. Because although the higher time frame is bullish, we have a bearish short-term downtrend. So after hitting the demand zone, market makes a change of character with an inefficient move leaving behind a perfect 15-minute order block. So this is a signal that the short-term downtrend is over and the market can potentially continue to move to the upside. So we place our buy position a spread size above the 15-minute order block with our stop below the swing low. But remember, change of character trades are most effective when they break through 2 or more supply-demand zones. Change of character forms after a higher time frame mitigation. Price impulsively breaks through the zones with a few large candles. So let's move on to the next setup. This setup is called the continuation pattern. So we only trade this pattern when we have a clear trending market. Every time market makes a valid order block with all the rules we discussed earlier, it is an opportunity to place a trade, only if we have both higher and lower time frame direction on our side. But remember, market will give you a lot of entries while trading this pattern. So, you have to manage your risk carefully. Let me show you what I mean on the real chart. So starting from the left, here, we had a winning trade. Here is a losing trade. Here is another losing trade. And finally, we had a winning trade and so on. So the key to success in this trading pattern is patience and risk management. So in the final example, let me show what a true multi-time frame analysis looks like, with all of the concepts we discussed earlier. Starting with the 4 hours time frame, we can clearly see that price broke the last demand zone to the downside with inefficiency. So this candle that created the inefficiency will be our order block and a perfect zone to look for short opportunities. So overall, in the 4 hour time frame, we have a bearish bias, and since the price has reached our area of interest, we will zoom in for 1 hour to see what is going on. We can see that we are in an uptrend in the 1 hour time frame, so we need reversal signals before placing any trade. Also, we can spot these equal highs, which is a perfect liquidity zone for someone who wants to sell the market and needs a lot of buyers. And finally, we will zoom in 15 minutes to execute a possible trading opportunity. Here in the 15 minutes, many interesting things are going on. After mitigating the 4 hours order block, we can see that we have a supply and demand flip pattern. First, the market broke through structure with inefficiency, leaving an extreme demand zone behind. But after testing this demand, the market failed to make a new higher high, which shows momentum loss. Secondly, market breaks this demand zone to the downside with momentum, which signals a possible trend change. So this candle that created inefficiency will be our order block supply zone. So this is how we execute the trade. We will place a sell order a spread size below the order block zone with our stop protected above the swing high, and we will target the next level of structure. Also, we will track our profit, meaning that every time market makes a new order block, we will adjust our stop loss and secure some of our profits. Well guys, I hope you enjoyed this video and that it will be helpful to you. If you are feeling generous, please give this video a thumbs up and subscribe to our YouTube channel since we publish